All right, what's going on, everybody, and welcome to another episode of the Market Misfits podcast. As always, I'm your host, Joe Pokeshiva, now known per Lucci as Joey Gex, joined again with my partner in crime, Smiddy Federate. Smid Dog, how are you doing today, my friend?
Doing fantastic, Joey Gex. How are you doing?
It's such a weird thing to be named that, but Lucci's not wrong. It's how you market. So I'm good, man. Today is April 7th, 2026. Last podcast we did, I believe, was second week of March. Finally got through OPEX and some of the fun shenanigans that we had with the quarterly expiration as well with the JPM collar. So that was fun. And then obviously not so fun, but more fun, I guess, for the markets is a lot of this Trump headlines with Iran and kind of what we're doing and talking about here. So I want to preface the pod right now that obviously me and Smiddy are not trying to condone violence. And, you know, it's sad when we hear about missiles going and blowing up places that there might be civilians at. But we are traders. Those things do move the markets. So when we're speaking about what's happening with regards to war and Iran and oil, or any type of missile attacks and all of that, we're talking it from a trading perspective. It has nothing to do with personal views or, you know, how things are going on over there. We don't dive into the politics and all of that. So I just want to preface that before we get started. Today, what we're going to kind of talk about is I want to talk briefly about the JPM collar and what happened with that on the 31st, because there was a nice gamma move that I think most people weren't necessarily paying attention to unless they've been on the FinTwit side of things or in our room and kind of saw what we were talking about. And then I want to talk about how they rolled it this time. It's a little bit different. And then we will dive in a little bit more to what Smitty wants to talk about, which will be oil and Iran and a couple other more macro style themed things. So Smid, why don't you kick us off here with where we're at on the indexes right now? And I'll dive into the JPM collar.
Yeah, of course. So a bit of a hectic session, of course. SPY and NASDAQ finished pretty much flat on the day, despite being a bit of a hectic session. And then for year to date, we got SPY down 3.85%, Q's down 5.8%. The big outperformer, of course, is oil and energy. We're going to talk about later. Up 95% year to date on crude, which is pretty insane given it's April. And gold still doing okay over there, stable at 8.9% up year to date. So people still finding a little bit of safe haven in the metals despite some big selling. And Turkish Central Bank actually offloaded, I think, about 2,200 tons of gold, if I'm not mistaken. I will fact check that and we'll put that in the comments for sure. But big sellers there and kind of makes sense with what's going on. So yeah, that's the year-to-date update on these guys. And Joe, hit us with what happened post the gamma exposure.
Yeah. So the only thing I kind of want to dive into, there's a couple other tidbits from this because Jem came out with a pod and is pounding his 35% drop drum again, which we'll get into after this. But what I really wanted to focus on for right now is kind of what happened on the collar roll day, right? So JPM collar rolled every quarter. They currently use SPX options and have used SPX options. This is the first time after this past expiration that they're not going to be using SPX options, which is interesting and we'll talk about. But what I want to do is kind of explain what happened and some of the dynamics of gamma and why it's becoming more and more important on a 0DT basis to understand what's moving the markets. Because I think a lot of this too that's kind of happening is it maybe warps a little bias into people's minds and perspective, right? When you see like a pump or something like that, like, oh my God, back to all-time highs, when that's really not what's happening. There's a catalyst, and then there's something that happened underneath the surface that helped move the catalyst. So I'm going to share my screen for those that are watching on YouTube. For those that are not, I will explain this as best I can. So what I'm looking at right here, this is from our partners over at Options Depth that provide dealer-signed SIBO data, so we know exactly what side everybody's on. What I want to focus on really is this strike right here, which is the 64.75 from March 31st. This was the long put of the JPM collar. So what that means is from a market maker perspective, that makes them short gamma on this strike because they are on the opposite side of the trade, right? So This creates a lot of negative gamma. For those that don't understand gamma, brief explanation of it is when we're in positive gamma, dealers are trading against price, which slows it down. And when we are in negative gamma, dealers are going to trade with price. We've been in a negative gamma regime for quite some time now, but this particular day had a much larger move, which was a little more interesting from our perspective. So, what I want to look at here again, 64.75 strike. You can see all of those market maker short puts from the JPM caller, and right around this time, it says 12:30 Eastern time. Markets were kind of just sitting sideways or flat on the day from where we opened. I think we're up just a little bit at that point. We opened 64.10ish. We're sitting at 64.40, so maybe up 30 handles. And we ended up getting a nice catalyst event from, I believe it was a Trump tweet, right? And they were talking about peace, right? The catalyst was definitely peace, right? Smid, correct me if I'm wrong here.
Yeah, yep. It was talks.
It was peace talks, right? And if I kind of zoom in just a little bit, this little dash line that you see on this map, again, is showing where the screenshot was taken. This red is all that negative gamma. We got a pop from 64.44, and then we went to a high of 65.10. And the reason I bring this up is because of the dynamics at play, because we went through the 64.75 strike, and even as we led up to the 64.75 strike, that gamma and that delta was just increasing rapidly on a market maker's books. And the way they have to hedge that delta was buying more futures. So not only do we get a catalyst, we blew through a very large negative gamma level where the delta just kind of exploded because of how high gamma was on that strike. In particular, we were towards the end of day, not quite, still, a couple hours. If this would have been completely end of day, that rally would have been even more intense, more than likely. But we kind of got that pop, blows through that strike. And then as dealers piled into more and more futures through that move, we ended up getting a nice top there at 65.15-ish. So, that's a, 80 handle move in a very short period of time. And then obviously a little bit of reversion until we kind of just grinded higher the rest of the day. So something to always pay attention to, especially as we talk about these catalysts that happen and what the real implications are. Everyone might look at this and say, oh my God, oil this or Iran this. Yeah, sure, there is a catalyst for it, but the real reason why the price action continued to push higher is because of this negative gamma that we had from this 0DT position that was sitting on the quarterly expiration. So this is something we pay attention to and that we trade off of all of the time. It was a nice trade for a lot of us in the room, but just something to pay attention to, as you get closer to these expirations, even if you're someone who's a little bit of a longer dated trader and not necessarily shorter dated like me. These are just levels to pay attention to, especially as you get towards expiration, because they can give you an idea of what's really happening underneath the surface. And then where's SPX right now, Smid?
We are sitting at 66.16 actually.
Okay. So obviously today, this helped, kind of propel us a little bit higher, even post all of this with some of the other news that we have going on. So again, just wanted to kind of explain those dynamics. I think it's cool. Hopefully you guys find it interesting. Definitely something to pay attention to. Our partners over at Options Depth are great. For anybody who wants to actually get this data, we do have a deal with them. Just use code STEAMROOM at checkout, get 10% off. I'm actually rocking their hoodie today. But really great information. You can even break this info down, not only just from, retail perspective. You can see what firms are, how firms are positioned. You can see how non-professionals are positioned, how professionals are positioned, how brokers are positioned inside of SPX. So pretty cool tool, a lot of data for, all the durations that you trade. And this was cool. So the next piece of all of this, and I'm not going to share my screen anymore, is what happened with the roll. So typically, the JPM caller rolls, and we get our strikes, we see it through the flow, and it's on SPX options. This is the first time they are not going to be using SPX options at all. They moved to something called, from the CME group, called SME, okay, which is just like month-end options. They announced this product back in December of 2025. I am going to make an assumption that it was created for them. Luckily, we have some big people in the room that have access to some of the people over at JPM that I've had ping an email to kind of ask for some more information. We've gotten some back, but I want more on like how the hedging is going to happen and how this dynamically is going to get moved around, and how we can maybe take advantage of it. but obviously they moved to their own product, which I guess makes sense now that everyone pays attention to it. And I'm assuming it's from their perspective, not only that, they get maybe a better cost or setup. I don't really know. I don't want to dive into the specifics because I don't really know. But if I get more data on that, we'll talk about it on future episodes. But definitely interesting that they moved to a completely different exchange and are using a completely different product than they ever have before.
Yeah, it's pretty wild to see that kind of size move off of the most liquid market in the world. Pretty insane to think about.
That is definitely interesting. And on that note, now that we're talking a little bit about like gamma and vol and all of that, our boy Jam Jam Croissant on X is pounding the 35% dump drum again. If you guys listened to our pod last year, we did one called Chapter 1 of a 35% drop, which was talking about Gem and what his read was of the market. Obviously, we haven't had it, but he's back, Smid. He's back. He's pounding the drum again. He thinks that because of zero DT positioning and how things work, things are a little bit muddier now from a micro structure and compared to the macro structure. But what's your take on that? Where do you think we're dumping again another 30% from where we're at?
30% from here. I have a hard time believing it. But let's for shits and giggles, let's see what that puts us at.
So I think it means he's peak to trough, so it'd be all-time highs.
Okay. Peak to trough is not too shabby when you really look at that. I mean, that puts us a smidge below COVID lows. And I say a smidge, a good few hundred points on S&Ps. But,
so what does that put us at, number-wise, 35% from the all-time?
About 4,500.
4,500.
Right.
Dude, that would be sick.
Which
I would love that.
Again, you'd be sitting there bouncing off of what was local highs in August of 23. Not to get all technical and crazy on you, but it would be an interesting point. And it would set up, remember last year when we had all the tariff news and everything broke down into March, April, that was unprecedented. If you go back, zoom out, I implore you guys, go look at your SPX chart, zoom out for 2 years. And tell me what you see on a daily chart. Would that be that crazy? Yeah. Do I think 35% is probably excessive? For sure. 5,400? No. Reasonable. Would it feel like the world is ending? For sure. Do I think that tonight could be the catalyst? Fucking perhaps. We actually might see it. If Trump means it, we'll see. But yeah, I think that would be unreasonable. I think that would be a healthy correction. And ultimately, I think it would be a huge buy the dip. I would be, but I'm mostly cash. So I'm sitting in a place of I'm licking my chops. Like Joe said, preface this with, we're not war hawks over here. Nobody wants, we both have family high up in the military. Joe nor myself want anyone boots on the ground here. But I would be in a position where I would be absolutely buying some bombs being dropped in a significant manner. More significant than what we've seen. So that said, if the tape gets bombed, I'm a buyer. And 35%, my opinion, excessive. But
that's excessive for sure. But I'll take it.
Right.
I would take
absolutely.
it. My 401k and all my retirement accounts would absolutely love to see that price. Right. And to your point, it's one of those things you're going to hold your nose and buy on any crazy dips like that with some time. It's kind of what we would do. We'd be probably playing leaps for a year and a half, year out. Just kind of trying to sit through whatever pain that we have currently.
Bought some leaps yesterday, actually. So select names.
It's just funny to see a guy like him pound the drum. And then, I'll see other people that are traders, like either in our room or something else on FinTwit with some people that I respect. And they're talking about a completely different thing, saying once the macro shock, on all of this oil and Iran stuff. So they just see us going back to all-time highs and past it. So it's a good way of saying no one really knows what the hell is going to happen. From the guys that I talk to on the macro side, and I know we'll talk about that a little bit, I think they're a lot more bearish on the economy and like longer term perspective, which I totally agree with and understand. Yeah, macro is not my strong suit. I'm much better on into the weeds of the intraday and weekly stuff. But something else that he mentioned, which kind of segues into what you wanted to talk about, Smid, is he mentioned oil and
Right.
Iran, and he mentioned kind of what's going over there. So he was basically saying that this war has nothing to do with nukes at all on Iran, and all it is about oil and energy. And I'm just curious, like, what's your take on that?
Uh, well, that's the what it's about part. I can't really opine too much on that.
Great answer. Look at you, passed the test.
Listen, I
Because
can't
we
say
don't
why.
know. That's
Yeah.
so that's why I asked you that specifically like that, because not I have all the respect in the world for Gem or anybody.
Mhm.
But for us as traders, as you know this, guessing it doesn't really help us,
No.
right? Doesn't get on what the point is. All we care about is how the market's going to move off of whatever they're doing over there. We're never going to get a clear cut answer anyway, whether it's about nukes, oil, energy. You can speculate. And yeah, someone's probably right, or someone's going to listen to this and be like, wow, you guys are idiots. It's clearly about oil, or it's clearly about nukes. Yeah, no one really knows, like
Right.
in this day and age. So, but
Well,
anyways,
and
didn't mean to derail you.
no, no, no. And that said, I mean, how big of a tinfoil hat do you want to build? First of all. Second of all, this isn't the first time in our lives we've heard the weapons of mass destruction, sell us on that pitch, right? We did this before. We waged this war. So that's kind of tough. That said, the global implications and where we go from here. The uncertainty, don't, we're seeing it priced into markets, right? That's a big issue. What I get concerned with is the lack of demand for gold and precious metals, right? I think that people are actually scared and they're looking at, hey, where am I going to get my aluminum? Where am I going to get my steel from? We need to make sure that we have corn. And read an article yesterday about Japan making sure that they had a 4 to 6 month supply of naphtha so that they can continue producing all the plastics that they make over there, right? It's We have been very fortunate in our lives with how great things are. For the most part, we don't see supply chain chokeups. COVID was an exception to the rule. But this is different. This is, I think, going to actually put a lot of people in a bind. This is going to squeeze a lot of smaller economies, and the bulk of your everyday consumers are going to feel this in their pocketbook, which I don't think is great. That said, what are some of the solutions we have? And so, Joe, I wanted to read a clip or a passage out of the Austrian theory of the trade cycle. And this is a bunch of essays from a bunch of our favorite people: Hayek, Mises, Rothbard, Keynes. You guys know the types. So in here, he basically says, it is the preceding inflation that makes the depression phase necessary. We can see, for example, that the depression is the process by which the market economy adjusts, throws off the excesses and distortions of the previous inflationary boom, and reestablishes a sound economic condition. The depression is the unpleasant but necessary reaction to the distortions and excess of the previous boom. Unfortunately, for most of us listening, and the two of us ding-dong speaking, we have been able to enjoy those excesses for the majority of our life. And at some point, someone who appreciates the Austrian view of economics, the chicken's got to come home to roost. I think the Fed has run out of levers to pull to try to save the market, and we're seeing this in yields. Yields are getting a little spicy over there. I pay a lot of attention to the MOVE index. It's been jumping around quite a bit. Be fantastic if we get an update more than once a day on that. I'll digress. There's not too many bond traders in the room if I had to make an assumption here. So herein lies the problem. The Fed cannot really do anything to circumvent the administration's war policy. I think that we have a much bigger issue heading down the pike than what's happening in the next, 4 to 5 hours, right? As far as I'm concerned, and from what I've seen, we have B-2s that are flying towards Iran, set to reach the airspace right around the 8 p.m. Eastern deadline. I don't know if Trump's playing games here, but the economy is kind of in shambles. And I wonder if we are, we're in a fourth turning, right? Neil Howe talks about this in his book. Highly recommend you guys go read that if you are not familiar. It will give you a bit of peace of mind of where we're at in the cyclical nature of humanity and society as we expand and contract, right? Unfortunately, a fourth turning is usually a bit of a societal contraction. It's tough. It's the good times create weak men, right? We're going to experience that. So we're experiencing the now like weak men. And I'm not going to throw people under the bus. I'm sure plenty of you see it on your social media and in your everyday life, right? This isn't your everyday fucking rub some dirt on it like Joe and I were taught as kids, right? You got knocked down, yeah, get back up, playboy. I don't want to hear you crying. It's not how we. It's just not the reality.
It's true. You're not wrong.
No, but
the last generation of people that grew up that way.
Absolutely, man. You can't teach kids to skateboard these days. That's really impossible because it's not dude, ice hockey's got to be the same, man. Either you're cut from the cloth or you're not, and I'm not going to convince you youngsters. But that's the problem we have. We've grown up in this easy, soft, economy's always been stabilized or supplemented in some way by monetary policy. I think we're running out, man. What's interesting too is I really expected Bitcoin and the cryptos to play a bigger role in this chaos. I expected to see significant outperformance in Bitcoin, which has been just the most mediocre asset for the past like 2 years. I mean, I shouldn't say that. It did crack an all-time high, but down again 21% year to date. If you can't tell, guys, I'm a little bitter Betty over here as a long-term bag holder of the cryptos. So that said, man,
but your cost is like sub 10K. So shut the fuck up.
Yeah.
It's on bag holding. The dude's still up 6x, if not more.
It's a heavy bag to carry, guys.
Yeah,
still a bag. Still a bag. 2 loaves under each arm, as Jay would say. My point being, I think we're in for some discomfort. I don't think the Fed can fix it. Jay Powell's on his way out. Does he even care to fix it? I mean, yeah, maybe you want to have a nice legacy, but.
Well, Jed, there's some rumblings that Jay Powell might, not that he's going to obviously get reinstated, but he might be at a little bit longer than May.
Is this the rumblings now? So
there's
no Kevin,
rumblings.
They were shooting for
the new Kevin Fed chair will not be, and I think they said approved to take over. So that would be interesting. But
right,
and then not to cut you off, but I have a question for you with what you're saying.
Fire it up.
So when you're talking about the Fed and you're saying you don't know what else they can really do, are you saying that the Fed is out of tools entirely? Or are you suggesting that it's not that they don't have any tools, it's that every tool that they have comes with some sort of ugly trade-off?
Exactly. They're never out of tools. The Fed's never out of tool, but the tool is the printer, right? So we print money, and we're right back in the boat that we were pre-COVID.
So what do you think the biggest problem is then right now when you're saying like the Fed cannot carry the load, right? Like what is the biggest issue that you see? Like if you're saying we're in for some pain, like what are you just saying? Like what's your perspective?
Ultimately, we have a bit of a failure to grow, right? Where's your next marginal customer coming from? And I'm asking you that from the perspective of Joe, your Facebook, your Google, your Amazon, right? Who's your next one?
It's called Meta.
Pardon me. Sorry, Mark. I recant. No, but genuinely, where's your next customer? You've tapped everybody out.
I figure at this point, everybody's a damn customer except for new babies, right?
Well,
and even then, some of them have accounts.
And this brings in the whole fourth turning aspect. We have a huge demographic issue in the United States, China as well. I'm sure Europe. You take out immigration, most of these countries are pretty fucked with the rate of reproduction. I got a huge bridge to sell you guys here. We need those kids to keep the Ponzi scheme going. If we don't have more kids,
explain.
If every couple doesn't have the average that we need to repopulate, I think it's 2.1 kids per couple, right? So that means you and your lady got to have 2.1 kids. Me and my wife,
I don't know how I'll have a 0.1, but I'll try, bud.
Well, that's the magic of it, right? Some people are going to have 1, some will have 3.
I'm just being an asshole at this point. Keep going.
Point being, we're seeing a slowdown in reproduction rates, and we're not seeing that population rate keep up with, at least and I should say that in the form of naturalized citizens. Again, nothing against immigration, super necessary, especially for someone like us with a growing economy. We definitely need that and want that. But the problem is it's still not happening fast enough. Those babies, right, are the next customer. Every 20 years, that second generation, right, is going to be the big next marginal buyer. what we're seeing is a shift away from the Facebook, the Instagram, these traditional sources, and these younger generations are moving towards their TikToks. They want to be more involved in crypto and decentralization. They want to kind of keep things a little smaller in their niche versus what we're used to. Not to say these big guys won't buy them out and absorb that smaller and absorb those, younger customers, but I think that we are getting to a point where inflation is taking a bite out of people. I'm hearing it from everyday folks who are really complaining about the price of everyday goods, their gas, their groceries, going out for food and drink, starting to become more of a true luxury than just like hey, we can afford to do that all the time. Now I'm hearing couples are saying, we're just going to go like every other weekend for a date night, where they were twice a week or every weekend types. And those are people who I know to have, pretty decent jobs, making good, multi six figures between each individual in the couple, and even they're pinching. So when you're seeing that, when you're seeing people making $300,000, $400,000, $500,000 a year, starting to tighten the pocketbook, that's concerning. Those people, those are intelligent consumers for the most part. When you see a slowdown there, that is going to trickle up. That trickles up to expensive vehicle purchases, bigger house, right? You're not going to go buy that Rolex, the diamonds. You're not going to go do that stuff. The big vacation you were going to take is now going to be a nice vacation. You're not going to go to, Grand Cayman.
Yeah,
you're going to go to Florida.
You're driving to the local Smoky Mountains.
Exactly. Which, again, nothing wrong with that. Beautiful places. But when I'm seeing it in my personal life and people that I've known for decades who are starting to pinch a little bit, it's like, all right, that's noted, and their jobs are on the upward trajectory. They're not in, something where they're very like treading water, right? These are pretty well-to-do people. So that's an interesting data point. When I see that kind of pullback, I get a little concerned as well. In the trading world, I think that we are a bit numb to it because so much of this data is just, again, another point for us to operate, to figure out what direction we want to trade. How can I make my money today or next week, right? Whereas these are some folks who are saying, oh yeah, I can't. I got to actually pad my savings. People talking about tapping their retirement accounts.
So when you see all of this, what's the time horizon that you're talking about? Just so everyone knows, what are you looking at here? Obviously, it's tough to time when you think that the economy is so bad that we're going to go down. People have been pounding that drum that we have a poor economy for probably the last 2 years. I mean, I have seen it on the job front with people that I know. They haven't. I feel like went a year and a half without finding jobs. It was brutal. We know credit card debts at all-time highs. Right. It's like when you're seeing all of this, obviously it takes a long time for the impact of what we're talking about to take hold. So what's your time horizon that you're talking about here? Honestly, give me a specific answer. It's not easy.
No, that is a really hard time horizon to place. I guess if I had a really solid answer on that, I'd place all my chips on that bet and say, you know what? If that was the case, I'd call my client and say, hey, dude, we're max short.
Right.
If I really thought it was going to blow up and, Jem's crumbs were correct and we were following that trail, I'd say, dude, we're buying, let's buy the 6,500s full account out to fucking the fall and we'll see what happens. It's way harder to really put the timing on that because here's the reality. This data with a lag, right, that the Fed is seeing, of course, they want to act like they're on top of it. They're not. It's all lagging indicators. So they're going to look at this and they're going to move relatively slower. I don't think that they can save the day. All they can do is print money and the inflation will hit 6 or 8 months down the line. If they started cutting checks tomorrow, right, literally, let's call it next week, everybody starts getting stimulus checks. What do you think is going to happen? People are going to go out. They're going to go buy the car.
They're going to buy the going out and spending, bro.
You go buy your house. You buy stocks, right? The other side of this is with inflation, we see the price of these things go up, but it's the value of your dollar that went down. Do you see the problem here? There's the misconception that you're buying more. Like you're not buying more. The GT3. I'm a fucking big Porsche fan. GT3s, love them. Track the market for all generations like an absolute knucklehead. I turned down a GT3 RS a few years back at 169,000. People have driven those cars up to 20K and they're selling for 230, right? Do I think that that car got more valuable? No. Your dollar's just not going as far. And the ding dong who owns that GT3 RS doesn't need any more Uncle Sam coupons. That guy's probably good. There's a reason he's driving that car around. You know what I mean? So I think the misconception is that, things are getting more expensive when in reality, stocks are getting more expensive, but really it's just the value of your dollar in your bank account's not buying as many shares. It's so fucking backwards for what most money managers are going to talk about, but that's the reality. We live in a dollar environment. In 0 day, I talk a lot about the DXY. Nobody ever really engages besides Blue Water, right? I don't understand why people don't realize that it's important.
Well, they know it's important. I think it's just for that particular trading room, they're so focused on like 1 minute trades versus the dollar is much more of a longer term.
Right. True. But when I'm looking at the myriad, right, we've got volatility, we've got dollar, we've got credit spreads. They're all telling us a tale, right? And especially with oil right now, because I know that that's a big thing. We are again, and I know that I believe it's Brent Johnson, but it's the milkshake theory, dude. We're the cleanest dirty shirt in the laundry. And ultimately, I'm really happy that we get to save and spend in dollars. But what I'm looking at, and when you're asking for timing, I'm looking at timing foreign markets 6 to 12 months out. Looking at South America, Japan, Korea. I'm going to be looking at a lot of foreign markets. And, I'll elaborate on this further. I'm not 100% on this thesis, but this is what I'm starting to lean towards, is that's where I'm looking. And again, for those of you out there, go look at some of the publicly traded Japanese companies and how pristine their balance sheets are. Yes, they have an issue because of their, talking about demography in Japan's even worse than it is here. And, likewise, China's got a similar issue to the US, but go look at the balance sheets of Japanese companies, man. Those guys, very disciplined in the way that they run business. So if you wanted to buy quality, because I'm saying, the world's going to be in tough times, I think that that's a place I'd want to buy quality. I'd love to own quality in Japan. Probably funny. You're probably not going to hear too many people say that, but that's a bit of a thesis that I have working. So we will see. Again, guys, I could be totally wrong, but that's my thesis. So I'm going to stick with it, and we'll give you an update on the next round.
I love that. No, this is not stuff that we usually talk about, right? So it's cool to try to get perspective because, it's not something that I overly focus on. I have my own doubts and personal opinions of the economy, but I'm nowhere near an expert. And that's kind of the beauty of what we do and talk about is we don't have to be. You can speculate all you want. And we will get someone on here in the process of locking them down who's really, really good on the macro side of things and loves to talk about it to do the pod. And I think Smid will really, really have someone who's not like me, where I understand what you're saying. And it's interesting to me. It's just I can't add as much to the conversation because I don't go as deep down that particular rabbit hole, right? But I do question, to your point, like, what happens on the Fed side of things, at least this year, because, we went from rate cuts to now rate hikes. So I think there's a lot of uncertainty and how that kind of shakes out from a trader's perspective and what happens overall. Like I told you before, I'm still very bearish on the jobs and in the economy just from what I've seen, but I've been pounding that drum for 2 years. And everyone's like, oh, where is it? And I'm like, yeah, that's the problem. I can't time it, but I'm just telling you what I see. I know really good people that have been out of work for a year and a half. Like, I'm not making that up. It's just, when do we see it? I couldn't tell you. But no, I appreciate your perspective and all of that. And, I wanted to just switch gears a little bit and talk a little bit more about Iran and what's supposed to happen tonight. So, do you have any commentary to add? Obviously, we're going to find out what Trump is going to say, and there was a potential today. They're talking about another 2 weeks push down the road, but any color? It doesn't have to be deep. Just any color on what you're thinking here.
You know what? Here's the deal. And a lot of this I took from Dr. Anas Al-Haji, really, really intelligent dude up out of Dallas. So you guys can go do your research on him. But from what I understand, the big issue is if we hit Iranian infrastructure, take out their power grid, they are going to strike the desalinization plants across the Gulf. The Gulf population relies super heavily on that water. That is a problem. That will be a humanitarian crisis of the ages, and they will not have a lot of time. There is no, there's not a fast solution usually when it comes to war with anything, right? But if people
Right.
run out of water, humans are relatively robust when it comes to no food. You can fast for
Yeah, but not water.
50 days. Yeah, no water, dude.
It's only a couple of days until the water
dude, and you're talking about
takes it from you.
Yep, and being out in the desert where it's actually hot, and you've got winds that are going to suck up whatever sweat you have left, dude. That's what I worry about. And again, we've got the issue of the war with Iran and their, I'm going to call it their administration, their leadership, but there's last I checked, I want to say the population of that country is 92 million people. I was not aware that I thought Iran was probably 30 million or so.
Yeah, much larger than you think.
Yeah. So again, there is, I'm always going to look at the people and say, hey, as a humanitarian, we can't have people like that in any of these countries suffering. Not to any degree, but to this degree would be absolutely extreme. So what I'm looking for is hopefully that doesn't happen. Hopefully we don't blow up their grid, and then the tit for tat will be blowing up the water plants. If they do, I'd say all bets are off, short everything, both hands. And we'll see that 3,500 or 35% drawdown Jem was talking about.
That could be the catalyst for sure.
Right.
You're going to need one. I would say, and this will probably be a good ending note for us, is there was someone in our room that made a really good thing at the end of the day today that I wanted to kind of read. So shout out whoever said this. I don't care. I don't know if they want me to mention it, but they said everyone involved has the same emotional intelligence of a toddler.
Yep.
And for that really, like, I read that and I was like, damn, like it's a great way to categorize it. And that's the part I again, we're not talking about trading in this perspective here, but that's the part that I really dislike. And I guess it is trading related because you're seeing all of this crazy taco and then the reverse taco and this and that. Like, we're just pouncing around. Right. But that's my whole take with a lot of this is just got egos running wild and whatever it's about. I'm not going to speculate on. I have an idea from my own views of what they're battling about, and from my brother, who's ex-military. So, we'll see what happens tonight. It'll be interesting with what Trump does and says, and then we'll obviously in for a very interesting next couple weeks. But until then, there really hasn't been much to do for a lot of people. Some of the bigger traders that we know have said that all they're doing is messing around with AI. I got that today from one of the guys. He's like, I can't invest or trade this shit. It's just because we're doing a whole lot of nothing, and we have been. And some people don't like to do the whole scalping intraday stuff like we do, which is totally fine. So, we'll see what this market kind of brings us over the next couple of weeks, and how Trump and Iran, continue to work together or not work together, and what that brings us from a market perspective. And at this point, I just want to see something. I'm bringing the preface of what we said at the beginning. I'm not hammering the war drum by saying this. I just want to see some sort of catalyst, whether it's up or down, just break this range and us maybe get into something a little more stable again. Right. Or if they're going to sink it, just start sinking it. This staircase down shit is driving people nuts. I mean, for me, it's good for intraday trades, but for any type of longer term perspective or even swing stuff over like a 6-month period, it's trash. It's just trash action. And I'm not interested in playing in that field. I'm already doing enough mental gymnastics trading around my only 2 core positions that I have in JPM and Avgo. And I've done well doing that, but I don't want to.
Yeah.
It's just give me the stocks go up environment, or just sink the pig to the point where I could just buy hand over fist and I don't have to think about it as much, Yep. But that's just wishful thinking. We trade the markets we get, and it's not, things don't happen the way that we want them to. But appreciate your perspective on all that, Smid. And of course, sure, we'll have a lot more to get into when some of this kind of plays out over the next couple of weeks when we do the next podcast episode. So,
and I did want to throw in a little correction earlier when Turkey sold 22 tons of gold and they swapped 34 tons for swap lines for the lira to stabilize currency. So I just want to throw that out there, make sure I got that correction in. 220 tons of gold would be a metric fuck ton. That would be all of Fort Knox, I believe.
A metric fuck ton.
And that is a very scientific unit of measurement, in case you guys.
It is scientific. Most people understand that. Metric fuck ton is definitely universally known
as a lot.
Yeah. So, anyways, catch you guys in the next episode. Thanks for tuning in. Catch us in the steam room if you want to talk with Jay, me, Smiddy, Ranchero, and Lucci. If not, we'll catch you on the next episode. Smid, have a good one, brother.
Take care. Thank you, guys.